My name is Justin Reid. I'm the CEO of Troilus Gold. Troilus Gold owns the past producing Troilus mine in the southern James Bay of Quebec. Operated successfully for 14 years between 1996 and 2010. During that time, it produced 2 million ounces of gold and about 70,000 tons of copper until the mine was shut down. It was shut down due to economic reasons and lack of investment by Inmet, as all of their capital was moved south to Cobre Panama and La Cruces. We became a company in 2018, acquired the asset privately in 2016 via an option agreement, and have moved the development forward. Troilus has drilled approximately 350,000 meters. We started with just over 1.2, 1.3 million ounces focused on an underground target. And through successful drilling, we've had upwards of 5 to 7 drills turning at any given time continuously over this period. We have defined a resource across the board, 13 million ounces total, of which 11.2 million ounces in it is indicated and 1.8 million ounces is inferred. Incredibly successful drill campaigns. We've expanded the known resources of 87 and J. We've discovered the X22 deposit, and we've also made a major discovery at the southwest, named the Southwest deposit. We've acquired over this period upwards of 1,500 square kilometers, where we've had focus exploration over this period. We have sold non-core ground recently, which has brought approximately $50 million into the company, which has funded a lot of our continued work. We remain focused on regional exploration away from the mine, but the core of our work has now focused on our 7 million ounce reserve. Reserve being the economic ounces which we can exploit immediately, and this has culminated in a bankable feasibility, which we released to the market about 2 months ago. We have spent 5.5 years drilling one of the largest resources in Canada, and we have spent millions of dollars putting a bankable feasibility out to the market a few months ago. This bankable feasibility, it benefits significantly from a brownfield site with significant inherited infrastructure on the order of about $500 million US of value. Our bankable feasibility shows a minimum 22-year mine life, producing an average of 303,000 ounces of gold equivalent a year. About 80% is gold, 20% is copper, with a little bit of silver. $1 billion US to build, 1.08 billion. Average all-in sustaining costs of $1,109. At today's prices, it produces a $2.6 billion MPV and a 25% IRR. After tax, that's about 1.6 billion and 20%. Our base case is done well below $2,000 gold. It still gives us a very positive return of almost 900 million US after tax and a 14% IRR. That aligns with other large-scale, low-grade bulk tonnage deposits, such as Greenstone, Côté, and the producing Detour and Malartic mines. At peak production, Troilus will produce over 536,000 ounces equivalent a year. This deposit, though capital intensive upfront, is generational in scale, and at base cases will produce over 150 million US in free cash flow a year. This is on only 7 million ounces equivalent of our 13 million ounce global resource. So we believe that opportunities for future expansion and or life expansion is huge.